What is going on, everyone? Welcome back to the channel. It is Monday, June 1st, 2026, and the market is absolutely on fire today. We've got 5 major stocks posting serious double-digit or near double-digit gains, and every single one of them is backed by massive volume surges. We're talking about Oracle, Palantir, Salesforce, Adobe, and Rivian all lighting up the tape today. I'm going to break down each one with full technicals, key price levels, and my 3-month price targets so you know exactly what to watch for. Stay with me through the whole video because number 1 today is absolutely explosive. Let's get into it. Alright, kicking things off at number 5 we have Rivian Automotive, ticker RIVN, trading at $16.30 today. That's a gain of 7.24% on the session. Now Rivian is not a profitability story yet, there is no PE ratio here, the company is still burning cash, but the price action today is genuinely interesting from a technical perspective, so let's dig in. First, volume. Rivian printed 59.3 million shares today versus an average daily volume of about 31.1 million. That is a volume ratio of 1.91 times normal. Nearly double the average. When you see that kind of volume on an EV name that's been beaten down, you have to pay attention. Now on the technicals, RIVN is currently sitting right at its 200-day simple moving average, which comes in at $16.30. That's a critical level. The stock also cleared its 20-day SMA at $14.33 and its 50-day SMA at $15.27, so we are now trading above all 3 major moving averages. That's a bullish alignment. RSI is sitting at 67.7, elevated but not yet in overbought territory above 70. There's still room to run technically speaking before we get a pullback signal. The 52-week range on RIVN is $11.57 on the low end to $22.69 on the high. The 6-month high was $22.45, so there's meaningful upside to that level if this momentum continues. Support right now sits around $15.27, which is that 50-day moving average. Resistance is going to be the 6-month high near $22.45. The catalyst story here is likely production updates or a partnership rumor. Whenever Rivian gets volume like this, it's usually news-driven. Keep an eye on headlines. I'm giving RIVN a hold with moderate confidence, not a strong buy because there's no earnings support, but the technical breakout is real. Coming in at number 4, we've got Adobe, ticker Adobe, trading at $259.21, up 7.36% on the day. Now Adobe is a name that has had a rough 12 months. Look at that 52-week high, $421.48. The stock is currently trading more than 38% below that peak. But here's why today matters, and why I think this move is significant. Volume first, Adobe printed 10.78 million shares today versus an average of just 4.9 million. That is a volume ratio of 2.2 times normal, actually the highest volume ratio of any stock on our list today. When a large cap stock like Adobe, with a market cap of $104 billion, suddenly sees 2.2 times its average volume, institutions are moving. This is not retail noise. On the technicals, Adobe is now trading above its 20-day SMA of $248 and its 50-day SMA of $244.45. The current price of $259.21 is right at the 200-day SMA, which also comes in at $259.21, so we are right at a major inflection point. The 200-day SMA is a line in the sand. Breaking and holding above it would be a very bullish signal for Adobe. RSI is 54.0, this is the most constructive RSI reading on today's list. It is not overbought, it has room to move, and the momentum is building. PE ratio is 15.11, that is remarkably cheap for Adobe relative to its historical multiples, and it tells me that the sell-off from $421 may have been overdone. The 6-month low was $225.35. If you bought there, you're up significantly today. Support is around $248, that 20-day SMA. Resistance is the 6-month high near $357. Adobe gets a buy rating from me with high confidence, the valuation is compelling, volume confirms institutional interest, and the 200-day SMA test is a pivotal moment. Number 3 today is Salesforce, ticker CRM, trading at $191.10, up a very solid 8.47% on the session. Salesforce is one of the most important enterprise software companies in the world, and this move today is meaningful. Let's look at what the data is telling us. Volume came in at 33.9 million shares versus an average of 19.7 million, a volume ratio of 1.72 times normal. Solid institutional confirmation of today's move. Now the technicals on CRM are clean. The stock is trading above its 20-day SMA of $179.03 and its 50-day SMA of $180.68. Just like Adobe, CRM is currently sitting right at its 200-day moving average of $191.10. Two major stocks testing their 200-day SMA on the same day. That tells me there's a broader macro catalyst driving the enterprise software sector today. RSI on CRM is 58.2, healthy momentum, not overbought, and there's room for continued upside. PE ratio is 22.12, which is actually quite reasonable for a company of Salesforce's quality and growth profile. Market cap sits at $156.5 billion. Now the 52-week picture is telling. The high was $276.80 and the low was $163.52. The current price of $191.10 means we are still 31% below the 52-week high. That is a significant discount if Salesforce can re-establish its growth narrative, particularly around AI-driven CRM features and their Agentforce platform. Support is at the 50-day SMA around $180.68. Resistance is the 6-month high near $265.57. CRM gets a buy from me with high confidence. The combination of reasonable valuation, solid technicals, and the AI tailwind in enterprise software makes this a compelling setup heading into summer. Number 2 today, and honestly it was a close race for the top spot, Palantir Technologies, ticker PLTR, up 9.21% to $156.54. If you follow this channel, you know Palantir has been one of the most talked about AI stocks on the market. Let's see what the data says today. Volume is absolutely massive, 92 million shares traded today versus an average of 47.5 million. That is the highest raw volume of any stock on our list by a wide margin. Volume ratio of 1.94. When Palantir moves on 92 million shares, the market is making a statement. Now the valuation story on PLTR is controversial. P ratio of 175.89 is extraordinarily high. This is a stock that trades on narrative and growth expectations, not traditional value metrics. Market cap is $375 billion. That is a premium valuation that requires continued execution. On the technicals, PLTR is trading above its 20-day SMA of $137.81 and its 50-day SMA of $141.79. The 200-day SMA is right at $156.54, again, another stock testing that critical long-term average today. RSI of 71.3 is the highest on our list and has just crossed into overbought territory. That's a yellow flag for short-term traders. Momentum is strong, but a pullback or consolidation would not be surprising after a run like this. The 52-week range is $118.93 to $207.52. The 6-month high was $194.17. So between current levels and the 6-month high, there's about 24% of potential upside in the near term. Support sits at the 50-day SMA around $141.79. Resistance is that 6-month high near $194. My rating on PLTR is buy with medium confidence. I love the AI government and enterprise data story. The volume confirms conviction, but that RSI above 70 and the eye-watering PE ratio keep me from high confidence. Wait for a potential pullback toward $145 to $150 for a better entry if you're not already in. And here we go, number 1 on today's list, and it is not even close. Oracle Corporation, ticker Oracle, up a stunning 10.84% to $225.78. This is a massive move for a company with a market cap of $649 billion. Let me say that again, a $649 billion company moved more than 10% in a single session. That does not happen without a very significant catalyst. Let's break it all down. Volume hit 40.96 million shares today. That's exactly double the average daily volume of 20.4 million. A perfect 2.0 volume ratio. Institutions were absolutely piling in today. This is the kind of volume that says something fundamental changed in the market's perception of Oracle's value. Now the technical picture on Oracle is incredibly strong. The stock is now trading above its 20-day SMA of $191.63, that's a 17.8% gap above the 20-day, which tells you this was a gap up or momentum surge. It's 32% above its 50-day SMA of $170.96. The RSI is 68.5, elevated but not quite overbought, and given the fundamental catalysts likely driving this, RSI overbought readings may be less meaningful here. PE ratio is 40.46, which is actually reasonable for a megacap technology company growing its cloud infrastructure business at this rate. The 52-week range tells an incredible story. The low was $134.57 and the high was $345.72. Current price of $225.78 sits right in the middle of that range, meaning Oracle has already recovered substantially from its lows, but there's still meaningful upside to the 52-week high. The 6-month low was $136, and today's price of $225.78 also equals the 6-month high, meaning Oracle just broke out to a new 6-month high today. That is a major technical signal. The most likely catalyst here is Oracle's cloud infrastructure business, specifically OCI, Oracle Cloud Infrastructure, which has been winning major AI workload contracts from hyperscalers and enterprise clients. Oracle has positioned itself as a credible alternative to AWS, Azure, and Google Cloud, and the market appears to be repricing that opportunity today. Support is now at the 20-day SMA around $191.63. Resistance is that 52-week high all the way up at $345.72, which represents over 53% upside from current levels if Oracle can reclaim its highs. I am giving Oracle a strong buy with high confidence. The combination of massive volume confirmation, a 10% move in a megacap, a technical breakout to 6-month highs, reasonable valuation at 40x earnings, and the AI cloud infrastructure tailwind makes this my top conviction call on today's list. My 3-month price target is $265. Alright folks, that is a wrap on today's top 5 movers. Quick summary: Oracle is my number 1 conviction call with a strong buy and a target of $265. Adobe and Salesforce both earn buy ratings as they test critical 200-day moving averages with institutional volume behind them. Palantir is a buy, but watch that RSI above 70. And Rivian gets a hold. The technicals are interesting, but there's no earnings story yet. As always, none of this is financial advice. Do your own due diligence and size your positions appropriately. If you found this analysis valuable, please smash that like button, hit subscribe, and ring the notification bell so you never miss a daily market breakdown. Drop your questions and your own analysis in the comments below. I read every single one. I will see you tomorrow for the next market update. Stay disciplined, stay patient, and trade smart.